You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. Do you know what your options portfolio is up to? Well, let's find out together. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hopefully you guys have been enjoying the slew of content hitting you yet again this week. Of course, OB on Monday and crypto. We had some great taste of the old advisors option on Tuesday. It's always a fun one to check out. Our last one before the election, so that's an important one there. Of course, Education Wednesday, you had your double dose of boot camp and OPR. And of course, today you get your double dose again. First off on the old option block, then later on today with TWIFO. So we're keeping you busy on the options front. Of course, if you like what you hear for any of those shows, leave those reviews on your platform of choice. And new folks can continue to discover all of the fun stuff we're putting out here in the world of options and everything related. And of course, keep those questions coming too. Particularly on a day like today, Thursday, we get to open up the mail block a little bit, so you guys get to have a little bit of fun here on the show. We do love to hear from you guys. And let's see who we're hearing from on the old program today. First, let's go out to a tranquil hamlet outside of Chicago, where hopefully they didn't get covered in snow. I think their weather shield was active. We had some snow here in Chicago earlier this week, which was just not acceptable here in October, listeners. We are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. A and B, did you guys get, 8 feet of snow out there this week?
No, we didn't even get 0.8 of an inch of snow, so we got a little bit of a dusting. It snowed pretty heavily on Monday, but it was almost all melted by the end of the day, so we're good out here.
Yeah, I'm just not mentally ready for, I don't know, everyone thinks of Chicago as this frozen wasteland, but truth is, not so much. But every once in a while we get these weird, aberrant early starts to winter, and we got one this year. So c'est la vie. Hopefully this is not a sign of things to come. And also joining us from a land where the weather just reigns supreme, of course, the shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program to you as well.
It is good to be back and getting ready for the big event next week. I'm looking at vol, and we got some moves, but everything's kind of feels like it's a little stuck in the mud all of a sudden.
Is there something happening next week? I don't know what you're talking about. Is it Christmas already? What's happening? I don't know what's going on.
It might be Christmas for some people.
Yeah, sure. It could be. Depending what side of the market you're on, there could be some Christmas coming. Yeah. By the way, Mr. Rock Lobster, our listeners are deluging us with suggestions for the 80s themed kickoff on Monday. Let me just say they're doing you no favors. They are getting obscure and deep and dark. So they're going to take it to the Rock Lobster, it sounds like here, Mr. Rock Lobster. So prepare yourself for that. If you couldn't get Miami Vice, you're going to have a hard time with some of these other ones as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. That's the portion of the show we break down what the heck is trading, what's lighting up our screens today, and it may be an unfamiliar color for those of you who are on the bullish side of the fence, because we haven't seen a ton of green, at least in the last few sessions, but we got some green on the screen today. Where you're living, where you're hanging your hat out there, and the markets will kind of depend what kind of day you're having, because the Dow is basically unched up slightly. Then we got the S&P feeling its oats up a little north of 0.75%, and we got the NASDAQ just on fire, up well over 1%, closing in on up 1.5%. It's up a little bit north of 1.33% right now. So feeling its oats out there. Of course, that's hot on the heels of a whole bunch of red on the screen, particularly yesterday. Yesterday was a pretty bloody day, and even with today's rally out there, S&P still well shy of that 3,500 level everyone's watching out there. It's at about a 32.96 or so coming into showtime. So still got a ways to go just to make it up back to those levels, let alone even 3,400 or beyond, up to some other levels out there. Coming into showtime, we saw our old friend Vix Cash. It had gotten a little bit higher. Now it's given up some of that. It was at about a 36 3/4 coming into showtime. Puts it up nearly 5 handles, about 4 3/4 from where it was this time last show. Of course, it hit a lot higher in between our two episodes here. It hit a high of nearly 41. Yes, we crossed the 40 handle, listeners, up to about a 40.70 a few sessions ago. And we got VVIX out there coming into showtime, looking pretty frothy, as you might imagine. Was at about a 142, even though that's a little bit lower than it was recently as well. That puts it up 15 handles, though, from last show. Remember, we used to use that 120 as kind of that upside barometer for things were getting frothy, things were getting toasty out there in VVIX land. Now we're well north of that, so watch out below. It hit a high, though, of even north of that. It hit a high of nearly 155, about 154.5 back in the height of the madness. VXX, our old friend, you guys love to fade. It's at about 25 3/4. That puts it up about a little over 2 handles from our last show. It was up a little higher earlier this morning, giving some of that back. It hit a high, of course, between our shows of nearly 27 3/4. So not quite breaking the 30 handle, but getting back up there a little bit. So perhaps, for those of you who love the old fade out there, perhaps resetting the clock for you guys to put some more fade on. We shall see. And our new friend, the newest addition to the volatility space, a.k.a. VolQ, is at about 37 coming into showtime. It puts it up a little over 4 handles, about 4 1/4 points. Of course, that hit a high of nearly 40, about 39.82 in between our episodes as well. So a lot has gone on since our last show, a lot going on today, a lot to unpack. Let's go around the horn the way we came. Let's start with the Unklest of Mike's. First, Uncle Mike, sir, walk us through the last couple of sessions. Obviously, a lot of red on the screen. Not very Uncle Mikey the last few sessions. And then what's lighting up your tape today, sir?
Well, this has been an eventful week would be quite the understatement. So in looking through a few things, Monday we had a big sell-off. Tuesday, markets were relatively flat. And then, of course, yesterday we had another big sell-off. So markets are down quite a bit on the week. And then today it's up it's up, S&P's up roughly 25 points, which feels like a fraction compared to the down days with which we've had. I'm still holding on to a small call spread at this point in time just because of the fact that the market is higher on the year, and until SPY goes to the 322 or so level, 321.87 is technically the close of last year. That's technically my mark, but until we're at that level, I remain bullish. But on here, I think that for me in my area, this is kind of an opportunity because of the fact that the downside, I'm not very far from my stop point, if that makes any sense. Now, of course, I have to prepare for gaps, which are a very big part of reality in this marketplace. But nonetheless, I think this is kind of an opportunity for me in a way. Now, there is that thing coming up next week that could change the course of our entire civilization as we know it. So I do want to be prepared for that. But tomorrow is my Prepare for Election Friday. I have a lot of ideas that I'm kind of going through right now into how I'm going to prepare for it. And I'll talk to the audience about it on Monday in the strategy block. with how I'm going to prepare going into the election with a lot of different things with which we're doing, of course. I mean, I can't give exact strikes and expirations, but I'll do my best to give you as good of an idea of what I'm thinking on Monday as I possibly can. What's unique about today is that, and the sell-off this week, is that where did the money go? In that if you look at SPX or SPY, we're down a pretty significant amount, but we're not gaining ground in the metals. We're not gaining ground in bonds. Where is this money going to? Are people just taking money out of the market, and there's that many people putting down payments on homes? I have a hard time believing that. So with that, a lot of times when you see things like this, when of the four major asset classes that exist, stocks, bonds, real estate, and commodities, it's really kind of hard to track real estate. I mean, I'm sure yes, there are REITs, but real estate is a very localized market in a lot of areas. But usually when stocks, bonds, and commodities are down, the money reappears somewhere in the next couple of days. Now, it might reappear in the markets. It might reappear in silver. It might reappear in gold. It might reappear in oil. Who knows? But it usually does reappear. So I'm watching for it, and hopefully when it reappears, we'll be able to capitalize on it in some way, shape, or form. So that's one thing that's lighting up my tape. The other thing that I think is on everybody's mind right now is, of course, the election. I said it on Monday, and I'll say it again. I think COVID is a very, very minor factor at best for this market coming down. Trump is gaining in the polls right now, and whether Trump's the right man for the market, whether Biden's the right man for the market, of course I have my opinions, but it's not for discussion on this show. But I don't think that the market's necessarily concerned with who wins. I just think the market is very concerned right now, and that's very with a capital V, concerned about a contested election. In 2000, when we had Bush Gore, let's be honest, their policies were different, but they really weren't that different. I mean, they were, of course, with Bush being the Republican, Gore being the Democrat. But the contrast that you have between Trump and Biden, it's night and day. So when you have uncertainty, if we drag this out for weeks and weeks like we did back in 2000, that's a lot of uncertainty for a long time. So with that being said, I really think that the market is very fearful of that. And volatility and higher option prices back up what I say, or I'm totally wrong, and it's all based on COVID. Who knows? But I still say that the fear that exists in this marketplace is based upon the election.
All right. And Mr. Rock Lobster, same question for you. Obviously, a lot lighting it up in the volatility space this week, so I'm sure your crazies had a lot to do over there in the pitch chat this week. I'm sure Volman was pretty busy this week as well. What was lighting up your tape on these pretty major moves in the vol space this week, sir? Yeah,
actually, Volman hasn't tweeted anything just because he's been like a little busier, but certainly a lot of interesting, VIX went to 40. You had a couple of big moves here. What's today? Yesterday and Monday. We saw a short-term high in vol yesterday. And I think there is concern over the election. As I think Bill Luby wrote a nice thing about, kind of the vol goes down after the election. So, I think unless it's pretty clear who won and how many ballots are outstanding, basically a lot of states have decided to stretch out. I guess it has to be postmarked whenever the post office closes on election day, and then we wait. It takes the post office 6 days to get your ballot to you. My question is where are people dropping off their ballots? If you live in a town, how long does it take the post office to get the something you drop in the mail in your town? To the town hall to look at your vote. So, again, a lot of weirdness going on with this. So I think that was definitely a factor. COVID was another factor. And the polls getting closer, I think, is a factor. So, you've got some good threads going on here as far as vol goes. We did get that steep backwardation or that more severe backwardation this week. So now we have a higher vol in SPX in the short term. So people are kind of waiting for something to move. So they sort of price the vol expensive, price the move, like they're all locked and loaded. Vols popped up. And then now we wait to see what happens. So basically, what we're seeing or what we're looking for now is we have a date. And, I'm trying to get rid of as much vol. I probably could have gotten rid of a little more yesterday, to be honest. Got a bunch of vol puts after the election into the later NOV and early D cycle. And we'll see what happens. The thing is, like, almost everybody I talk to says, like, the vol's going down after the election. I think that everybody thinks that. I'm like, God, it can't be that obvious, I have these positions on. I don't have them huge yet. I'll probably wait till Tuesday. But even then, why are we at a 40? And we're at a 40 because the election juice is in there. So I don't know, what we're going to see or how big the overnight swings are going to be. I think TOSAW, we were talking about this earlier last week. I think the market pretty much accepted Biden was going to win. So, and then, with all the recent information coming to light lately, who knows if that's still going to happen. But at least for right now, they still have, ultimately they're pricing the straddle pretty high. Now, one thing you can think about is one reason the straddle is more expensive is because there's an expectation we just get back to where we were, which, from SPY land, let's say, if you're looking at that, is, for the SPY, what was that, 25 points away from where we were? We were trading 350, and right now we're trading 328. So it's pretty reasonable to think of a $20 or $25 straddle sometime after this. So if I look at the NO6 cycle, and I'm looking at the 331 cycle for 1 week. Okay, this is 1 week, mind you. That's an $18. That's a $16 straddle. That's pretty darn expensive. That equates to about $160 SPX for 1 week. So there's some juice in there. There's no question about it. At a 41 vol at the money. So the juice is there. It's not going away. And I don't think it's going to go away until, after the election. I don't know what earth-shattering thing is going to happen but clearly people are worried. So like I said, I think I liken this more to Y2K, and I hope I'm right, just for the good of, the country in general. It's just going to end up being like, okay, somebody won. And then, then they go bitch and argue about it for the next 2 years until the next election. From a vol point of view, it is pricing a fairly big move. So I would say, don't be surprised if you see 350 again. But vol is pumped. No question about that. So, if you think that this is an opportunity to get into the market at lower levels, if you missed the huge rally, there's a bid for puts everywhere. So it's just a question of how you want to do it. But anyway, the straddle is expensive. It's expensive for a reason. And just to get us back to where we were, back to like around 350, which is, I think that was highs for the years right around there. And I think that's why it's pricing. So it's not even looking for something crazy to do, just kind of go back to where we were.
Not even crazy, says the Rock Lobster. Yeah, you're right. I do have that same kind of feeling on the back of my neck when everyone's expecting the big fade, right, post-election, that maybe we're poised for something else out there. It's the old, maybe fade, what the conventional wisdom is telling you out there. The markets certainly aren't fading anything today. A lot of volume on the tape right now. Let's start in VIX land. VIX almost at its ADV, and its ADV has ticked up quite a bit in the last few sessions, as you might imagine. Remember, not too long ago, it was threatening to break 300K to the downside. There was not a lot going on in VIX land. Now, today, as of a few minutes ago, 451,000 contracts on the tape, and the ADV has shot up to 463. So we're going to see another day north of that ADV, and who knows, maybe we'll get up at 500,000 again by the time we do vol views tomorrow. That would certainly be nice. SPY closing in on 2.25 million contracts. The ADV about 3.8 million. It's not the same story in SPY, not the same amount of explosion of volume out there in SPY. It's more of a vol product, localized phenomenon, it seems like. Same deal, about a little over 500,000 contracts. The ADV about 1 million. So both SPY and the S, roughly half their ADV out there right now. The Qs, similar story, about 2/3 is closing in. That's about 620,000 contracts. The ADV, though, has dipped down below 1 million now, which is interesting out there in the Qs. They've been north of 1 million for some time. And the IWM, aka the small caps, closing in on 400K. The ADV about 561. So a decently active day for small caps. But VIX clearly feeling its oats today. Let's see what's feeling its oats in the single name landscape, the top 10 most active single name options out there today. Number 10, Ford. Ford's been an interesting one. They announced good earnings yesterday, pretty much into the teeth of a hurricane. It's probably one of the worst days you could announce that kind of news because it just got gobbled up by the market. And the market says, yeah, we don't care. We're crushing everything today. So it's almost a day where maybe you should hit pause on your earnings announcement and wait until saner heads can prevail. But c'est la vie. It's translating into some options volume today. Ford good for number 10 at $1.62 on our list. Number 9, Snap. Snap's been hanging around out there in the top 10 a lot lately. In fact, it got up to number 2, I believe, very recently. Good for number 9 today at 202,000 contracts. Number 8, our old friend AMD, still in the top 10 there, 228,000. Number 7, Facebook. All those CEOs had to do their little dance before Congress this week. Facebook feeling some volume as a result, 249,000 contracts on the tape. Number 6, Microsoft, 254,000. They had earnings earlier this week. We'll get to them in a little bit. Number 5, Twitter. Also had to do their dance before Congress this week. 260,000 contracts on the tape. Number 4, Tesla. Tesla dropping out of the top 2 all the way down to number 4. A meager 365,000 contracts on the tape. Number 3, Pinterest, getting back up onto the top 10 and even into the top 5. 485,000 contracts on the tape there. That's a post-earnings name, I should point out there today. At number 2, NIO, back to electric cars, 760,000 contracts. So usurping Tesla's number 2 spot. Interesting. You know what number 1 is, don't you have to tell you. Apple closing in on 912,000 contracts. Of course, today's the big day. Today is the big day. A lot of names are popping off out there. This is a big week in general. If you pay even tangential attention to the earnings space, you need to pay attention this week, listeners. Let's just run off some of the names that have reported so far and are indeed reporting today and later this week. On Monday, we had Hasbro, so looking at the toy sector. Tuesday, we had Pfizer, the big name out there, given all the corona events going on out there right now. 3M, Caterpillar, Lilly and Merck also reporting on Tuesday. So a big day in the pharma sector out there. Microsoft was on Tuesday as well. AMD, JetBlue. Wednesday, our friends across the street there, Boeing, GE, Six Flags, Pinterest. I just mentioned them out there, of course, doing some post-earnings activity. Gilead out there as well. Today, of course, the big dog. A lot of the fangs reporting today, including 2 of the A's and the G. We got Apple, Amazon, and Google reporting today, as well as Facebook. So actually, it's all of the fangs but the N. Starbucks, Shopify, Twitter out there, as well as WWE after the bell, Uncle Mike's favorite out there, and Blizzard, Activision. And tomorrow we've got Chevron, ExxonMobil, Under Armour, a bunch of names. We've got some interesting analysis, some interesting move reports here. Let's see. We got some new ones here. So again, you can check these out for yourselves. I'm kind of seeing them hot off the presses myself here. You can check these all out for yourselves over there, theoptionsinsider.com, courtesy of our friends over there in Oris Land. Let's go back to Microsoft here really quickly. They popped off on the 27th. They were pricing in, $8.69. That was pretty rich because in the past they moved $5.71. As of this report on the 27th, that's when this report was generated, they were trading almost $2.15, about $2.14.80. And it looks like they actually, if you held on to that premium a little bit longer, you might have done all right because we've got this stock now trading at about $204.80 or so. So pretty much down about 10 handles, which is outpacing that already pretty juicy straddle. That straddle was about $8.70. They've traded down about $10 from this report. So again, these reports are kind of focused on really that initial post-blush crush on the vol front, but sometimes these things can play out over the course of a couple of sessions, and certainly if you're trading in the weeklies, you want to get that full week out of it. And so if you hold on a little bit longer, you got some of that move to help pay for that very expensive straddle going in out there. We got a few names out here. Let's see. Big names are coming up very soon. We had eBay popping off earlier this week. They were on the 28th. They went into their announcement at 53 and a quarter. They were pricing in about almost 6% move, about 5.9%, and they delivered a 7.1% move to the dark side. So interesting. A little bit of outperformance on that front. Pinterest, we were just talking about them. They were at 49 and a quarter going into their announcement. This one. This is probably why they're doing a little bit of volume. They were pricing in about a 15% move. They delivered pretty much double that, 29.9%. So a huge move in Pinterest. The stock just exploding. Apparently, folks pinning a lot of stuff out there these days. Interesting. A lot of names are firing off out here today. Let's see what else we got on this list. Gilead was on the 28th. We just talked about them. They were after the bell at the time of this report. They were trading, 58.72. They were pricing in nearly 4% move, and they delivered a little bit less than half of that, 1.9%. So a little bit light on the Gilead side, which is interesting given how much they've been in the headlines of late, and the efficacy of their treatment, or perhaps lack thereof, has been very much in the headlines. Keep it in that Pinterest kind of online vibe. We got Etsy. They were on the 28th after the bell as well. They were at 139.64 as of this report. They were pricing in 9.5% moves. So a pretty big move. And they delivered about less than 3.9%. So light vol was the name of the game out there in Etsy land. Let's do one more here really quickly. Grubhub, 28th was a big one for a lot of online names as well. Grubhub, and they were priced at 75.5 coming into this report. They were pricing in about 6%. Guess what? They delivered 0.3%. So Grubhub, not really moving at all out there, which is not a good deal for the people out there buying premium. The folks selling it out there, they're happy campers, and that certainly has been the way to go throughout most of these cycles. Now it's time for us to go into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild, time to unleash our Eye of Sauron upon the markets and see what it returns with, like a dog with a bone or perhaps a cat with a dead rat. Our Eye of Sauron returns with interesting, sometimes dubious treats. Let's see what it's returning with today. First off, we've got, I think this is a newcomer to the Odd Block. This is Humana Inc. I don't think we talked about them before. Of course, they are a large insurance company out there, health insurance company out there. Trading today, 401.87, their ticker symbol HUM, H-U-M. A year ago, they were well shy of where they are right now. They were at 295 and change. So it's been an interesting year for Humana, as you might imagine. It topped out at 372 right before all this madness back in March. And then it sold off down to 208. So it gave up quite a bit. It gave up not quite 50%, but pretty darn close to it. Out there on this name, and then it pretty much rebounded right away. This graph looks like the graph of the broad market. This is just a aggressive V-shaped recovery. By the end of March 31st, it was trading 314, and then of course June 8th was a big day for it. But even before it got there, 410, it hit 410 on May 29th out there as well. And unlike a lot of the other names that kind of apexed in mid-June and kind of fell off, this one sold off a bit again in June, but then it started rallying again. And by September 2nd, it was trading 427, and it topped out, looks like, very recently at 449.5, pretty much. So pretty good run for them now, giving some of that back. Like I said, pretty much threatening to break the 400 handle right now today. Let's see what we got here, what our Eye of Sauron found. Looks like maybe Mr. Rock Lobster. Maybe someone getting that old line in the sand on, and then perhaps deciding to roll it, keep it alive. If so, somewhat interesting timing. What first caught our eye was a 3,200 lot, 3,217 to be precise, of the Nove 415 puts. And these are not regular Nove, these are expiring on the 6th. So these are out on the weeklies, going up for Get this, $16.05. So someone getting a little bit juicy on these. Of course, it makes sense. These are close to, looks like about $12 just ticked up out there. So it looks like about $12 in the money right now. So it makes sense to be a little bit of juice on these bad boys. Also worth noting, we dug a little bit further and found another leg to this bad boy, the ACH 420 puts expiring tomorrow on the 30th. We're also going up today for the exact same amount a little bit later. Go figure, 3,217. They went up in 2 blocks, though, to get all of it done. And they went up, actually going through the offer for $14.50. So it looks like they did this spread / roll for $1.55. Mr. Rock Lobster, this is an interesting one for a number of reasons. The size is interesting, but also really the depth in the money is interesting. Well, you'd think, given their strike selection, they'd want to pick up some Humana. But when the opportunity comes around, they're rolling this. They're not getting it. So it's a weird one on several levels. What are your thoughts here on what looks to be someone rolling they didn't even go down. If they didn't want this stock, they could easily go down to the 400 strike if they wanted to do that. But they did not. They went only down 5 handles. So what's your take on this weird one here in Humana puts, sir?
Well, if you look at that, doesn't it feel like it feels like it's more of a closing type of trade, doesn't it? Or they're closing and trying again.
On the ACH, it definitely is closing, but on the NOVE, it is opening.
Yeah, and they're giving it another shot. So what do they do? The roll for $1.50, $1.55, something like that. So I guess they want to keep it going, and they're trying to pick up a couple more bucks. So if it was a line in the sand, Dealy Bob, this would be one that actually would be a rare one that kind of got run over by a truck. However, as I look at this, I'm not sure. Let's take a look here for Humana. I don't think. I don't know if this qualifies as our line in the sand put because of the aggressive nature of it. I think maybe, hey, you know what? It's certainly possible that they thought it was a line in the sand put, but the stock's down 10% in 4 days. That's a pretty big, as with all of the healthcare stocks, by the way. So there's kind of a theme on this, and I'm not quite sure what the deal is. But if you look at like Johnson & Johnson, Gilead is another example, like a healthcare stock like Humana. Thing was 440 and now it's 403. So I think they were thinking freebie premium, and I'm guessing they got taken by surprise a little bit here because Humana had a huge run, maybe because if there's like a Biden care type of thing, that stock was running up, and now they've sold it off. And I'm just wondering, it's the timing is very suspect. The market did sell off. There's no question about that. So, obviously cause and effect. Market's down about, that's 200 SPYs, like 8% from the top or something. But definitely healthcare is getting shellacked. So I don't know. It's because they think one candidate might be tougher than the other. But, if you look at it, it just doesn't look very good. So normally I would say these are not line in the sand puts because they were a little bit too close to the fire. But this person definitely thinks, they're taking it and they're going to roll, and they're rolling till after the election and see what happens. So that's kind of how I reel this one. But I'm guessing that this sell-off was a bit of a surprise for them.
Yeah, they got caught with their hand in the cookie jar on this one. We're going to come back to watch this one because it's not going to take too long. And, yeah, they seem to be maybe stubbornly resisting what's going on in the market. They're like, we're not going to roll down to a 400 strike. We're not going to do this spread for a debit. How dare we? We're still going to collect something. So they're only rolling down 5 handles is their only concession to reality. We've seen sometimes how that stubborn persistence cannot work out. So we'll come back to this, next Thursday and see how our friend is faring. If he has conceded to reality, if he's rolling down further, or if perhaps his stubbornness has availed him and the stock has rebounded. We shall see. Either way, this guy is playing pretty fast and loose here with some puts in Humana. Now let's roll on to our next name. This is another newcomer. This is Rheology Holdings Corporation, ticker symbol RLGY. They are a holding company that owns Coldwell Banker and some other real estate type names, hence the name there. They're trading right now $11.50. This is the name that a year ago was trading $8.50, so up pretty good, up about almost exactly $3 from a year ago. And then they topped out on February 25th at a little north of $13.88 or so. And then they sold off pretty hard down to a pretty aggressive low of $2.09 when all this madness happened. They've had a nice little recovery, I think it's safe to say out there, trending up pretty quickly. They topped out on June 8th at 8.25, and then they gave it all back down to like 7, almost breaking the 7 handle again. Then, unlike a lot of the other names we profiled, they started rallying again and broke back through that June 8th high. By August 25th, they were trading north of $11, and they've kind of been hovering in this $11 and change range pretty much ever since, with a few dalliances down to like 10 and change. So this is an interesting name here. They've had a nice recovery post-annihilation there in March. Let's see what our Eye of Sauron found out here. Yeah, this looks like this is a little bit of some call love. In particular, some post-earnings call love. They had earnings today before the open. Market obviously liking what they're hearing out of them, hence this $1.60 or nearly 16% move in the stock today. Someone deciding perhaps this upside is not quite done because they're coming in and looks like they're scooping up the Nove 12.5. So these are roughly, pretty much almost exactly $1 out of the money calls and paying 40 cents for the privilege. So they need this bad boy to run. If you're wondering, by the way, listeners, that's an 86.5 IV out there. So that's pretty juicy. That's a little bit of post-earning juice. So usually you wait for some of that post-earnings move juice to settle down before you dive in and gobble it up. Our friend here couldn't wait. He's like, I can't wait any longer. I got to get in, get these calls while the getting is good, or perhaps in his case, the getting is expensive. He paid through the offer for these. They were offered at 35 cents. So he had to pay to get them done too, which is kind of interesting. So yeah, Mr. Rock Lobster, looks like someone thinks the party ain't over in Rheology Holdings, sir.
Apparently not. I'll tell you what, though, unless your timing's been pretty good in this market, buying calls has been pretty tough business. But if you don't have a clever little device to help you navigate through all that stuff. But anyway, when you look at it as far as time wise, you think it's going to. You think you're going to get the move to that spot. I mean, it could happen. It could happen, but overall, just pretty pricey vol,
Yeah, that's pretty juicy. That's kind of hard to make work. If you wait a little bit, I'm sure you'll see that vol come in pretty aggressively. Yet this guy clearly did not want to wait. He got him off early, and he had to pay through the offer to do it. So, hey, good luck to him and to all of our odd block candidates. But if past his prologue, this is going to be a challenging one to make work. He needs it to run, obviously, $1.40. Takes a while to pay off, an 86.5% implied volatility. Now let's go back. Mr. Rock Lobster loves his line in the sand puts, so it wouldn't be an odd block if we didn't review one of those. This has been a frequent offender of late. We've come back to them a few times. Now we're coming back to them again. This is our old friend Match, a.k.a. Match Group Inc. They own, of course, Match.com, OkCupid, all that good stuff in that category. Ticker symbol MTCH. If you've been listening to the show for a little bit, we profiled a few line in the sand puts out here, and they seem to have worked out pretty well, at least the first batch. We profiled them initially on September 28th when someone blasted away at about 16,000 of the OC 90 puts for 48 cents. The stock at the time was 109. And you know what? Stock never really looked back. Those puts did pretty well. They expired worthless paper, taking home close to $750,000 for their efforts out there. I guess they decided that worked out pretty well. Let's do that again. So they did it again on October 19th, a little bit less size this time, 14,099 of the October par puts expiring tomorrow on the 30th. This time they did them for 35 cents. They actually got a couple cents better than the bid. They got price improvement on 14,000 contracts. That's impressive. The stock at the time was, let's see, where was the stock at the time? I have it here. 112.84 when these puts went up. And yet again, same pretty much exact story. The stock never looked back after this trade either. It was trading 122.5 this morning. Now it's up to 123.65, feeling a nice little just love fest out here. It's up 4 1/3% today. It hit a high during this period of the options of nearly 126, 125.78. So go figure, these puts are still open. This guy ain't closing these. And looks like this guy took home another about $500,000. Mr. Rock Lobster, if you add these two trades together, and you can kind of assume probably the same guy's up to it. I mean, you never know, but it seems like it. Similar size, pretty much the exact same trade, just different strikes. This guy looks like he took home close to $1.2 million. Is that your takeaway as well, sir?
It doesn't look like an insignificant amount of money for for these put sales. So line in the sand is still it's still a way to go without question.
That it is, and it's also a good way to go to answer some questions on a Thursday. So let's do that. Let's open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys take the reins, your questions, your comments, your insights, your pearls of wisdom to share with us and with your fellow OB listeners. Let's kick it off here with Mary Thomas. She has a question a lot of people have on their brains these days. Mary wants to know, what's the best way to get bullish without much risk? So clearly she thinks there might be some upside ahead in the near future for the markets, but she's probably, and you can't really argue or blame her, spooked about some more repeats of what we saw earlier this week out there. Mr. Uncle Mike, I'm sure you're getting this question pretty much all the time out there in Uncle Mike land. Your clients calling up, maybe new clients coming to you saying, hey, Uncle Mike, I would like to get a little bit of delta exposure or perhaps just bullish exposure in general to this marketplace, but I don't want to take a ton of risk. If that's the case, Mr. Uncle Mike, what would you say to folks like Mary Thomas?
Well, Mary, I think that in the option space, options give you options. So in other words, the easiest way, the oversimplified way that I would like to answer that question is you take a majority of your portfolio and or whatever money you want to put towards the markets, and you can put it into, say, bond or treasuries or something boring, so to speak. And then you take a small amount of money and you can buy calls with it. Now, of course, calls are expensive right now with a 40 VIX, but what you can do is perhaps buy spreads or something along those lines. I refer to it as the simulated index concept, and I've built my career on it.
There you go. The simulated index from the Uncle List of Mike's. Next up, we got Anthony T. He's also got a question we've seen many times out here, and certainly in the last couple of weeks, it's popped up quite a bit. Mr. Anthony T. says, another day when VIX is up and SPX is up, what gives? I thought that wasn't possible. Obviously, this came in earlier, not on today's show here. But Mr. Rocklobs, you touched on this recently on the program, but believe on VolViews last week as well. You said you thought this would be an environment that we might see a lot more of that in the near future. So why don't you break that down here for Mr. Anthony T. He's like, what gives? I thought that wasn't possible, sir.
Well, it is totally possible. Because it happens all the time. So you got to remember just what VIX is measuring. It's measuring volatility, and it's measuring volatility in the S&P 500. So the thing is if vol's expanding, if each vol of each strike is expanding, VIX is going to go up. Now, the way VIX is designed is, since it is sampling, right, every strike with a bid 30 days out, what happens is as SPX goes up, the at the money keeps moving higher into what usually is a lower vol. So because VIX has a square in the Vega weighting, what happens is, since your at the money keeps moving up and up into a lower and lower vol, that will push VIX down just by having the S&P 500 go up naturally. What the difference is what we've seen a lot this year is, even though SPX is going up, the actual volatility is expanding at the same time. So it is negating the natural movement a VIX, because if vol's expanding at the strike, it's going to expand at every strike in general. So that's why SPX can go up and VIX can go up. And usually it happens when the move in SPX on the upside is so severe, it's blowing apart the value of volatility at the money. It just keeps expanding and expanding because SPX just doesn't go down. So liquidity provider who just sells a straddle at $20 and the SPX moves $40, that's not a win for them. So they have to keep vol expanding until basically the buyers slow down. So that's the deal.
Sometimes the interplay can get a little bit interesting. It's not just some passive, thing that just has to have this relationship. There's things afoot in both products at the same time, which makes it kind of interesting. Speaking of both products, Vijay Bala, he was listening, I guess, to our advisor's option program earlier this week. Obviously, that show's only once a month, so it's hard to get to all those questions on every episode of that program. But he was listening to our conversation about the old comparison, the old contrast, the old debate between SPY/SPX puts and VIX calls as a quote-unquote hedge. VJ says, SPY puts have always worked better for me. I've always lost money in VIX. Yeah, you're not alone there, VJ. What I said on the show, and I think most of us came down on the same front, is if you're looking for a very specific hedge, the puts are going to be your better bet. They are a more reliable, more consistent type approach. Every study I've ever seen says in the vast majority of quote-unquote normal markets, you're going to be better off with those puts because they are predictable. They get you what you want and what you need out there. In a scenario where your SPY or your SPX is gently moving down towards your strike, not a heck of a lot out of those VIX calls, but you will get some movement out of those S&P puts. I've always considered the VIX calls as more of like a kicker or something else you add in as a more speculative tool rather than just a hedge. And of course, all those studies, we talked about them many times at places like RMC and others, they have always said if you factor in the explosive nature of VIX, which of course we saw on full display earlier this week, then VIX can outperform, and you want to be there for those moments, but that's not really a hedge, just more of a speculative type thing. So Mr. Rock Lobster, I know we've discussed this many times before in the past, but what do you have to say here for VJ saying he prefers SPY puts, they've worked better for him, he's always lost money when he plays in VIX, sir?
Well, I guess as TOSAW would say, if you want to hedge your stuff, use SPY. There are times when VIX is better. It's just you have to understand how the product works and then how it can make you money. A lot of times when VIX is this high, it loses its usefulness, right? Money in VIX is made below 16 and above 20. Once it is already in those areas, though, and it's kind of just beating around a little bit, you don't really make a lot of dough. So to make money in VIX, you need it to change zones, like from a high vol to a low vol or low vol to a high vol. That's when the money is made in there. When it's just kind of beating around in the middle, after it's made a partial move, you need it to really kick. So you have to kind of structure it in a way that can make you money if VIX moves. But SPY is easy. You think the market's going down and you buy it. So it does work fine. Where VIX really works well is it does make a nice disaster hedge. So I like it as, okay, I'll buy some VIX calls. And your VIX or VIX call spreads will stay in a spot, right? Because the only way VIX goes down is if SPY generally makes some kind of a rally. So in that way, it actually makes a pretty good hedge for some put spreads and SPY and stuff like that, because you can work well out of the money in the SPY and you can buy your VIX relatively close to the money or relatively close to where things trading. So because, the nature of VIX, you have those backwarded contracts, you could get artificially cheap VIX spreads right now. So you have to understand that when you're trading VIX, you're trading the future for the term. You're not trading the cash VIX until, a day or two before expiration. So I think that might be part of the problem. You think you're trading VIX cash, but you're really not. You're trading where the futures are. And I think that's why SPY can be easier, because SPY is here, it's there, your puts make money, and there's not a lot of confusion. But VIX can be a little tricky or just a little funky because of what the underlying is.
VIX is full of funk, but you're right. In those moments, like we saw earlier this week, that's when you might want to have some VIX in your back pocket. But calling it a hedge, I've always taken issue with that. Speaking of taking issue with things, it's an interesting question. I'm not sure how much time we have to get into it fully, but it's interesting to at least bring up. We can probably revisit it on future shows. This comes from Tens. Tens says, I use Robinhood to trade my options. There are times when I see size on the bid or offer, but when I go to trade it, I'm not filled. What's up? Shouldn't I be filled instantly? Does this have something to do with the PFOF I've heard about? PFOF, of course, listeners, is payment for order flow out there, a contentious topic in the world of options and indeed stocks. Yeah, Tens, this is kind of interesting. I personally have not used Robinhood. I'm getting a lot more of this kind of feedback here. I'm starting to think maybe I should play around with it for myself. Usually we do that. We try all the major brokers. Just haven't had a chance to add Robinhood into the mix out there. So I can't speak from my own experience what the fills have been like. I will say this, speaking to our audience and a lot of the people on our network who have utilized it, it seems like I've heard them fall into two distinct camps. In the early days, this is kind of in the early days of Robinhood, they were just starting to add options, and kind of right before, all the other major brokers really went cheap to zero commissions out there. People were actually reporting to me they were surprised at how good the fills were. And these are some people I know who are pretty active. Maybe some of that was diminished expectations. They knew they were going to a free or a low-cost broker, so they weren't expecting much. And when they got decent fills, they were pleasantly surprised. Could have been some of that at work. And then it seems like now that most of the major brokers have kind of followed suit and eliminated stock commissions and reduced options commissions, now that they're playing in that realm as well, it seems like we have seen a little bit more discontent come up around some of these fills. But I will say this, Tens, if you are just doing straight up, let's say 10-lot, single leg, trying to hit the bid or lift the offer, and you're seeing displayed size there on the bid or offer, and it's enough to cover your order, then you should be filled. You are correct. So I'm not sure what is up with that. If you're trying to join a bid or join an offer at that time, then no, you're not going to get filled. You're going to fall to the back of the line or somewhere in the middle, depending on how your order is routed there. So you're not going to be filled instantly on that front. So let us know more about what you're trading out there. Maybe you're trading spreads. That's also an issue we see with spreads. I've said it before. The spread NBBO is notoriously unreliable, I think, to put it mildly out there. So if you're leaning on a spread NBBO, maybe that could be the issue as well. But let us know more specifics. And also for the rest of you out there, I'm curious. I want to get a little bit of a representative sampling. What has your experience been like with Robinhood and some of these lower cost, shall we say, even though they're all low cost now, but some of these lower cost, lower point of entry type brokers, specifically for the options experience? I don't care about the stock side. I want to know what your experience has been like using Robinhood and some of these others on the options front. I'm going to probably try to play around with it myself and see if I can get you some more actual use cases. I'm assuming Uncle Mike and the Rock Lobster, neither of you have used these. Have any of your crazies in the pit chat used Robinhood for options, Mr. Rock Lobster?
We did develop a product for, looking at option pit flows. So we don't use Robinhood, but we do use some of the flow statistics that, they publish.
But you haven't had any of your crazies give you any anecdotal reports on their experience, anything like that?
None of the experience of the platform, no.
All right, so we don't have any firsthand or even secondhand. I have some secondhand, but that doesn't sound like the Rock Lobster has any to report on. But I'm going to try maybe to wade in those waters a little bit myself. And meanwhile, if you guys have, let me know. If you're experiencing this on a regular basis, that is probably not a good thing. But there could be other factors at work which make it a little bit more difficult to figure out exactly what you're up to. Meanwhile, it's time for us to head on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, it is Around the Block time. Like I mentioned, we got some big earnings popping off just after the bell today. If you need a refresher, first off, Apple, they were at $116.87 as of the time of this report. They were pricing in, about $5.97, so almost $6. In the past, they moved $5.25, so a little bit rich, about $0.75 rich on that straddle. Amazon, they were at $31.84.94. They were pricing in $192.02. In the past, they moved $152.01. So interesting how much juice they're pricing in there. Facebook, Actually, a little less vol. Facebook was at $278.73. They were pricing in $16.09. In the past, they moved $17.61. So maybe someone in Facebook getting the memo that lower vol is the way to go. And of course, the G and the Googs, the G and the Fangs, was at, I should say, $155.93. They were pricing in $71.60. In the past, they moved $72.24. So not a heck of a lot of juice, really, either way on that Goog strat. Let's do Twitter really quick, too. Twitter is at 50 and a quarter as of this report. They were pricing in $4.49. In the past, they moved $6.32. So folks in Twitter getting the memo as well. Lower vol is where the saner heads are going. Let's see what saner head of Uncle Mike has to share for us. Uncle Mike, sir, what are you watching for the rest of this week into the weekend?
Watching pretty much just seeing where the markets go from the standpoint. I'm not seeing a ton of movement today or tomorrow. I mean, we could have some, but I'm really going to be watching for the gap up or gap down coming on over the weekend. I think we could possibly see a really large move come Sunday night if there's some type of news or some type of things going on in the polls. So ultimately, what I believe I'm going to be watching is the futures on Sunday night.
Yeah, watching the futures on Sunday night. Mr. Rock Lobster, same question for you, sir. What are you watching for the rest of this week into the weekend?
I'm looking at vol coming off pretty hard. I'm looking at SPX going up. I don't know why. I don't know what the news was today, but maybe the lockdown everybody's thinking of is not so bad, and maybe the election thing is not. Who knows? But anyway, you got a bounce, and the vol's coming down at least for today, for right now. So I'm just looking at the same thing because I think we're somewhat stuck with the election until a week from now, or a little less than a week from now. So
you're stuck with the election. You're also stuck with our special coming up next Tuesday night, so make sure you clear your calendar to listen for that. We'll have the Uncleist of Mikes and the Rockingest of Lobsters and a whole bunch of others joining us throughout that cavalcade of option stars at night. So check that one out. Should be fun. But before we go, let's go back around the horn. Let's start with the Uncleist of Mike. Sir, if folks want to reach out to you, ask you about being bullish or bearish or rolling puts or whatever the heck else they have on their minds, where should they go? What should they do?
StCharlesWealth.com. Check out my website. If you'd like me to contact you, there's a spot to where you can give me some contact information. Be more than happy to reach out to you. If you have concerns going into this election, you better contact me soon in terms of time it takes for money to get moved. But nonetheless, feel free to reach out to me. Happy to work with people. I'm a financial advisor who is not afraid of the option product.
He ain't afraid of no ghosts and or options. Pick your poison. Reach out to him, stcharleswealth.com. to learn more. Mr. Rock Lobster, I think he is afraid of ghosts, but he enjoys a little bit of volatility. Mr. Rock Lobster, where should folks go to learn more?
Check out, run on over to theoption.com, go to the memberships area. Check out our new Little John product. Mark just closed a bunch of Neo calls today. It was going off the hook about the interest in there. So yes, come on, head on over to optionfit.com, kick the tires on some of our stuff. And put some of that volatility learning and some liquidity learning into your brains and see what comes out the other side.
Put some of that volatility and liquidity learning in your brains, indeed. OptionPit.com is the place to go. Of course, you don't have to go anywhere right now. If you're listening live, you get some fun stuff piped in. We'll be back in exactly 27 minutes to break down some hot stuff going on in the world of FX. Don't get to talk about FX options a lot. Going to do that today and a whole bunch more coming up on TWIFO in a little bit. And, of course, we'll be back again tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. Then it all kicks off again on Monday with another episode of The Option Book.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.